So Dave, that time of the year again that we get the Property Frontiers crystal ball out and we try and make our predictions for next year. Just wanted to go over what we achieved last year, or what we predicted last year, and see how we got with that.
I think we didn't do too bad. I mean, I think the one big area of unsettlement, if you like, is the Eurozone, and people were predicting that. But in terms of the property markets, I think our view on that has kind of held to be true. With the UK, the forecast I think was pretty much spot on.
One of our biggest markets.
Exactly, it's been very popular throughout the year. With the US, again, that was very good. And in the emerging markets, our big pick was Brazil, amongst others, and that's been right. And I think it's been right in the sense that investors wanted to be in those markets that we predicted, but also they have performed broadly in line with what we expected.
And also, alternative was a big winner for us this year.
It was. I mean, investors are really into alternatives at the moment, and particularly for us, the Bamboo Bond was exceptional. So,
as we move into 2012, we need to start thinking about what we think are good markets. Obviously, we've been doing a lot of research so far in the different markets. I think we've got quite a good idea. Let's start off with maybe the UK. What are your thoughts on the UK market?
Well, the UK market is interesting, I think, because the general consensus view is that the outlook's negative for 2012. I think people see the prices falling in the north, maybe holding stable in the south and the southeast in particular. But it doesn't necessarily mean it's a bad time to invest in the UK in general. I mean, whether the market's falling, rising or stable, there are always opportunities to be had. And I think if people continue to focus, like we did last year, on high yielding property assets in the UK, that's really what's telling you a good price indicator. If the yields are good, then there's room for capital growth as the market recovers, and now might be a very opportune time to invest in the right deals.
So hotel rooms, student accommodation, care homes, those types of different asset classes, I think are kind of the ones that we're going to see, or we certainly have seen this year, and I think moving forward into next year, very popular at the moment.
They're very popular, and I think it really comes from being a yield play. So those kind of asset classes have generally long-term, stable tenants, good levels of income, and a yield which is certainly well above what you traditionally find in a UK buy-to-let right now.
What about London? So I know you're saying asset classes, but I think there is a certain, because of London is unique almost to the UK, and there's a lot of inward investment. We're seeing certainly a lot of our foreign investors are now looking at London or asking us for the London market. What are your thoughts on London?
London's unique. I mean, London and the UK virtually have, as markets, have very little to do with one another. And for sure, there's opportunities in the London market. I think it's a different price point. People have to be willing to get in at a different level. But if we can show them the innovative means to getting into those property classes within that market, then it does make it accessible to more people. Right.
So, Dave, one of your favourites, the US market. Obviously, we've seen a lot of sales at the beginning half of this year. Certainly Florida, as we see, there's still a value play there. Where do you think it's going?
Well, the economic backdrop again for the US is not as great as it could be, but property prices have shot so far below fair value, I think, as a result of the economic crisis, that they still present great buying opportunities. Yields are very, very good. Prices are at the lowest they've been seen in a generation. In some areas they've started to pick up already, but I don't think investors should let that put them off. If you haven't got the lowest price, doesn't mean today's price isn't a great one. I think there's some really, really good long-term investments to be had in many parts of the United States.
I agree. And Florida was our biggest US market. Obviously looking at Vegas and a few others. Any others that you think could be of interest?
Well, the ones, as our research team has obviously pointed out, it's those markets that really overshot during 2005, 2006, became very, very frothy. Those are the ones that have dropped back down, to below what we would see as fair value. And Florida was one of those. Places like Vegas, parts of California, and those are the ones that really to hone in on.
What about Eurozone? We've touched on the Eurozone. I think it's one of the things that a lot of our customers, certainly, we've heard a lot of customers speaking about. I'm pretty nervous about what's going on in the Eurozone at the moment. What are your thoughts?
The future for the Eurozone itself is kind of uncertain. But when you look at that at a more, just specifically at the property level, it's harder to distinguish exactly what that means. And I think there may well be some significant opportunities presented.
Sure.
I mean, if the euro itself falls substantially in value, as it started to do, that might present interesting opportunities for people who want to invest in second homes in southern Europe, because they're going to get a lot cheaper in sterling terms. And that instability itself might create some buying opportunities. I mean, I think when you're looking at a market like the Eurozone, it's about, can you pick up value today rather than are you buying into something which is going to grow? I think we can all accept that there's not going to be a great deal of growth. But the other thing as well is that we shouldn't really mistake Euro and Europe. I mean,
exactly.
The 17 nations that make up the Euro are one topic. I think there are really interesting opportunities in other European nations that don't have the Euro.
Like Poland
Poland's a great example. Young population, burgeoning middle class, economic growth, which is benefiting from the strength of Germany, for example. So I think there are interesting opportunities in Europe. I think they particularly will appeal to certain groups of our investors, and we'll be working hard as always to try and identify the specific opportunities amongst the potential turmoil that's out there.
What about emerging markets? Where would you say is good opportunity for next year?
Well, emerging markets still present an incredible opportunity. I mean, the recession, as it is, has really partly been a rebalancing of global wealth. So, wealth has moved east. Things are slowing down in China now, but emerging markets have had fantastic growth whilst the Western economies have lagged behind. And that's come through into their property market as well. And it's partly the reason being is that many of these countries are experiencing that demographic dividend. They have young populations, people going into the workforce, which is also a fantastic underlying driver of property price growth, because these new young households are being created, they need somewhere to live.
Istanbul is a big example. That's one of my favourites at the moment. It's a prime example in case that there's a mass migration from the outskirts into Istanbul. It's a growing middle class, and I think that's where, from an opportunity, there aren't many places where the fundamentals are so strong. But then again, looking at Asia, there's another kind of, a lot of people talking about the Eurozone at the moment. Asia, China bailing out the Eurozone. What about the likes of Southeast Asia?
Well, I think the markets around Southeast Asia and its periphery, many of them are already very pricey. There are specific opportunities, I think. The big opportunities would really be if you could get into China, but technically that's very difficult right now. And so we spent a bit more time as a result looking at the more open economies of South America. Brazil being at the heart of that. We did found some great investments for clients last year. We've spotted some new ones for the year ahead. And the market there, I think, is going to continue to boom. Right up into Central America, where many of these countries are benefiting from being close to big commodity-driven economies like Brazil.
So also alternative investments has been a big part of our business for the last couple of years, and it's certainly this year it's 50 or so % of our revenues come from alternatives. I think as people start to look for interesting new asset classes with a lower cash investment and high returns that's secure, that's certainly one of the areas. And I think next year we're certainly going to see, you've certainly been doing quite a lot of travelling recently, having a look at new areas. Where do you see from an alternative investment? Bamboo was our 2010 our main product. In 2011 moving into that, but where do you see 2012?
Well, I think the whole alternative sector has evolved because it's what investors wanted, and there's been an innovation about tying property deals to fundamentally commodity-driven products and making them accessible to everyday property investors. That process has happened, and now it's really about identifying those commodities in the future which are going to deliver the most profit. Bamboo's been hugely successful because it's seen as being a key material of the 21st century. There are, of course, others. I don't think you can really tie it to geography, though. It's really about it's about the market sector, and there's several particular new areas that we've been looking at. In Central America and in Africa and Southeast Asia. So
we've gone over quite a lot there. We've certainly got our work cut out for the next 12 months or so. Really interesting opportunities, and I think I'm quite excited now. I think, as many people have heard, I'm probably more excited than I was when we first started the company, just because of that there's lots of opportunities out there. We just need to make sure we're bringing them onto market. But I think one part of advice that I would like to, certainly that's one thing we always bang on about, even if people aren't buying for us, is the importance of research, the importance of due diligence. It's so easy now to search on the internet, find out the background of companies, find out the background and research the fundamentals of markets. I think that's one of the things that we fundamentally advise, and that people should be doing next year, regardless of whether they trust in our predictions or not.
Yeah, I totally agree. I mean, there's a lot that people can do for themselves when they start the journey to become a property investor or grow their property portfolio. We'll be working hard to present them the opportunities as we always are, and as we know from our clients today, they're very diligent bunch generally. They'll be working hard to understand those opportunities in great detail. So it's going to be another interesting year, and looking forward to bringing those opportunities to those clients and seeing what we can do together.
For more information on where to invest in 2012, contact Property Frontiers today on 0044 1865 202 700 or visit www.propertyfrontiers.com.